Find out the more likely effects of all of this plunge. We're joined now by CGTN Global Economics Analyst Saruhan Hatipoglu. He is also the CEO of the risk analysis firm BERI. He joins us now from here in Washington. Some analysts say, as panicky selling. Others say as a mini flash crash, as John pointed out, maybe the computers got involved. But no matter how you slice it, the news is bleak. The S&P 500 has lost more than $1 trillion in value in February. The month's just begun. How do you see this?
Well, the numbers are bleak in terms of absolute value, absolute number, Mike, because if you look at it, the way the stock market stands right now, it is the lowest it's been in less than 2 months. In December 8th, it was pretty much at this level. So the absolute level has been affected by it, but it was not very difficult to see that this was coming. There was a lot of excess in the market, in the stock market as well as the bond market, and the investors were complacent. They didn't hedge against risk, and we have warned our own clients about this. I know a lot of risk analysis companies have done so as well. But when complacency sets in, it's really difficult to hedge against it. And I think the market paid a price for it on Friday. They paid an even bigger price on it today.
How much longer do they pay the price?
Well, in the short term, I think it's going to continue a little, I would say a couple of days. But if you look at the fundamentals of the economy, they are strong. The earnings of companies, they're strong. So in the short term, I think this is going to be continuing for, I would say, like a couple of days or so, like I said, but it's going to pick up afterwards because there are a lot of good individual stock buying opportunities here. But my concern is not in the short term, despite what we're seeing today. It's more like in the medium to long term.
Morgan Stanley had an early warning that the tax cuts might actually overheat the economy. It could lead to a boom, then bust. Do you think that's what we're watching here, or is this just a correction?
It is not yet a correction. It's going there, but exactly what I said, medium to long term, you just touched upon it. It is the tax cuts that we've seen, not necessarily that the tax cuts were bad, but the amount that was given into the economy at a time when the economy has been growing for about 9 straight years is too much. And I hope that that's the end of it, but it is not. We have an infrastructure spending bill that's in the making. That's going to put in another $1.5 trillion or so into the economy. That's why I said medium to long term, I'm more concerned because these have to get paid somewhat, and the public debt in this country, the budget deficit in this country has been increasing immensely already.
Talk to me about the interconnected quality of all of this. I mean, the Nikkei is down. Australian markets took it on the chin. How do you see this affecting global markets?
Well, if the U.S. sneezes, emerging markets and other economies, especially in Asia, catch a cold, and that's what we're seeing today. But in Australia, I would also say that the retail sales number came about an hour ago or so, which contracted. I think that has played a role in their reaction to it. Look, this happens a day after the U.S. market. We're talking about over 1,000-point drop. This is huge. What I would recommend is watch how Europe closes tomorrow around 11 o'clock. If Europe sees the opening here and somewhat recovers because their futures are down too, and they close in a positive way, I think that's going to have a positive impact on the stock market here.
We will keep our eye on it, Saruhan. Always a pleasure talking to you. Thanks so much for joining us from Washington, D.C.
Good to be here.